Be Wealthy and Smart, episode 1595.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Fed decision this week because the Fed is meeting and we're expecting a 0.25% interest rate cut. Will it happen? Well, I can't say 100%, but I can say that the CME FedWatch tool is telling us there's a 90% chance that the Fed will cut by a 0.25% on Wednesday. That is up from under 67% a month ago. The increasing optimism has recently been reflected in stocks, which scored their second positive week in a row. The S&P 500 and NASDAQ also notched 4-day winning streaks last Friday, and the Dow Jones Industrial Average had its third positive session in 4 weeks. That was based on a reaction to the softer-than-expected September core personal consumption expenditures price index data, but there was also November ADP data, which showed even more of a labor market slowdown. In the ADP data, it showed that private companies cut 32,000 workers, with small businesses hit the hardest. That was an indication that the domestic jobs picture is worse than expected. Payrolls declined sharply, down from October, although larger businesses entailing companies with 50 or more employees actually reported a net gain of 90,000 workers. But businesses with fewer than 50 workers saw a decline of 120,000, including a drop of 74,000 among firms with 20 to 49 employees. The total loss was the biggest drop since March of 2023. Education and health services led gainers with 33,000 hires, while leisure and hospitality added 13,000. The biggest loss came in professional and business services, which saw a decline of 26,000 jobs. Other industries shedding jobs included information services down 20,000, manufacturing down 18,000, and financial activities and construction both saw losses of 9,000 jobs. The rate of pay also slowed, with workers staying in their jobs seeing a 4.4 year-over-year increase, down 0.1 percentage point from October. So that ADP report is the last jobs picture the Federal Reserve will see before it makes its decision on Wednesday. And the Fed policymakers have expressed a divergence of opinions. One side sees cuts as necessary to head off further labor market troubles, while the other worries that additional reductions could aggravate inflation, which has held considerably above the Fed's 2% target, at 2.8%, I believe, currently. Stephen Colano, Chief Investment Officer at Integrated Partners, said, "The market action you've seen the last 1 or 2 weeks is kind of essentially baking in the very high likelihood of a 25 basis point cut. For some very unlikely reason, if they don't cut, forget it. I think markets are down 2 to 3%. Beyond the anticipated cut, Colano expects Fed Chair Jerome Powell to emphasize a data-dependent stance for the months ahead, especially given that last week's November ADP data showed even more of a labor market slowdown. Not only that, Powell's term expiring in May 2026 could make him kind of agnostic toward market expectations regarding next year's rate path." Colano added, "I would not be surprised for Jerome Powell to be like, 'We've cut, and now we're in a place where we really need to watch the data,' and he'll stop just short of being hawkish, because we've seen the softness in the labor market. If you start to see rate cuts get pushed out further into 2026, then you should start to see, I think, more negative pressure on the market in the first half of the year." When we look at other things happening besides rate cuts, we see that 22 stocks in the S&P 500 are trading at new 52-week highs. And that is very bullish momentum indeed. And it's a good thing to see broad market participation rather than just the Magnificent Seven being the ones having positive performance. So we are expecting to get that 0.25% rate cut. There are a few members of the Fed who want a deeper cut than just a 0.25%, but I think the chances of that are slight at this time. So we'll look for that 0.25% rate cut on Wednesday and assess future economic data as it unfolds. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more wealth tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.